Heartening story to tell. That was the Honorable Mahen Kumar Siratan. Again, ladies and gentlemen, we did not have opportunity for questions, but please use the app to make the necessary network and to provide questions to our Honorable Minister. We're moving on quite swiftly this morning, almost coming full circle in terms of our panel discussions. Our first panel discussion asked the question, what is it that investors want? This panel discussion, chaired by Shamin Ahmad Sukia, who is the Managing Director of Peregrine Capital, talks about how to achieve strong investment returns in Africa's financial sector. Please, can I invite our panel up to the stage? We will have a 45-minute discussion. Thereafter, we will break for tea. Thank you again for staying with us.
Hi, Shamin.
Nice to meet you. Yeah, nice to meet you. Hi. Aziz.
Aziz, how are you?
Hey, Vanitia, ça va? Allez-y. Hi, Antonello.
Maurice, nice to meet you. Hi, Antonello from Maurice, nice to meet you.
Yeah.
There was some words on the air.
Yes, there is one missing on this part. Honorable Minister, very good morning. Ladies and gentlemen, good morning in London. So we have our panelists today. So the topic will be banking panel, so how to achieve strong investment returns in Africa's financial services sector. So I think we're missing two panelists. So I think they're doing some shopping in London, we don't know. So we'll just wait for them, but still I will start. So we have on the panel, so we have Antonello. So Antonello is Associate Managing Director of EMEA Insurance and for Africa Banking. So he's responsible for Moody's analytical team, maintaining Moody's ratings on EMEA Insurance, insurers and Africa banks. I understand you have an MBA from the HSC and is alumnus of London Business School. So quite a long, CV, so I just cut it short. Thank you very much. So now we'll move on to Vanita. Vanita, who is from Mauritius. So Vanita, she's from DITUS, right? So more than 15 years of experience in the financial services sector, so mainly global business. And I understand you've been working also at Nestle. You've been traveling quite well, so extensively in Africa. So a lot to say on yourself. And you are an experienced director on the board of many global business companies and also a member of the MIUD, so Mauritius Institute of Directors. And Aziz, so Aziz Chacha, so as Uncle Aziz, so Treasurer, NMB Bank Tanzania. So in Hindi, Urdu, we say Chacha, it means uncle. So I will say Uncle Aziz. So Aziz has several years of executive leadership in banking. He's part of the NMB Bank Executive Leadership Team, so responsible for funding and capital planning, transaction advisory, strategic balance sheet optimization. And you also hold an MBA from the University of Manchester, and you're an executive coach also. So you're also a certified member of France-based ACI Financial Markets Association. And you have over 17 years in treasury risk management. Okay, thank you. So shall we start with the first question? And of course, you know, it's like a 45 minutes panel discussion. And of course, we'll invite questions from the audience also. So if anything just prompts your mind, if you want to ask any question, just wave your hand and then I'll listen to you. So, but let's start with, we're talking about the financial services sector in Africa. So let's talk a bit about the landscape, the banking landscape in Africa. Just a bit of history, just to understand a bit, you know. So I have in mind, you know, the situation prevailing during the 1990s, 1980s, early 1980s, and late 1990s. The IMF and the World Bank coming at the rescue of economies in Africa, and also about the rising importance of the central bank in Africa and many African countries. So maybe we'll start with the lady first. So Vanita, please, just like 2 or 3 minutes, you know. We just want to have as many questions as possible. And of course, we'll listen to the questions from the audience afterwards. Please, Vanita.
Thank you. Thank you very much, Shamim. A very good morning to you all. I'm very happy to be here. And I think, yeah, we have a very interesting topic this morning. So basically, if we look at the whole evolutionary landscape of the financial services sector of Africa as a whole, I think you are very right in saying that in the 1970s and the early 80s, Africa faced a myriad of challenges in terms of, you know, developing its financial sector, especially given the macroeconomic and socio-economical, political instability that causes really a banking distress. And with that whole financial distress, I would say the most impacted institutions were mainly those that were government-owned, so the government-owned commercial and development banks. And obviously that was quite a very gloomy picture at that time. But on the flip side, with this banking crisis, this actually prompted far-reaching policy reforms that came up, instituted by the IMF and the World Bank. And I can just name a few examples because I think those are the most important ones, like, for instance, abolishing of the credit ceilings, also in terms of abolishing the interest rates, those preferential interest rates. But most importantly, we saw also the privatization of the government-owned commercial banks or other financial institutions. And also there was the instituting of the microprudential regulation and more tightening of central bank supervision. I think with all those major reforms that came up, obviously those helped to halt that banking crisis, but also led to the emergence of a more diversified financial sector with, for instance, insurance came, and also in terms of more efficient deposit-taking institutions, as well as a more vibrant, let's say, security market. So following this, I think it's also very interesting to note that over the past 2 decades, there has been also a regulation towards supporting the growth of our microfinance institutions.
We just invite Sonny on the panel.
All right.
So you're a bit late, Sonny. So you have to do like 10 press-ups, huh? Okay. Please. Please. Okay.
Sonny, I'm good. Thank you.
So please, Vanita, maybe very quickly, if you could just wrap up with your comment.
So basically, we've seen the emergence of the Pan-African banks as well, which acted as a very strong driving force in creating financial integration on the continent. I'm just taking over a little bit of what the other panels has been saying in terms of the fragmentation of our markets. Sure. But I think by drawing this whole picture of, you know, the evolution of the financial services in Africa, I cannot actually not mention that Africa has led the world in terms of financial services innovation with mobile money, mobile banking. Obviously, I have to mention also M-Pesa. And obviously, there are now many other players. And with the pandemic, actually, we've seen an acceleration of this digitalization trend, and obviously transitioning all of us as African into more cashless societies. But having brushed this picture, Shamin, I think I will just add also something which is very important for our discussion today, is that the banking, the Africa banking sector remains still very small for the massive investment needs that we have on the continent. And I think this is where the dialogue should be, of how do we grow this sector and make it more sustainable.
Yeah, thank you very much, Vanita. You've spoken a bit about, microfinance. You've entered into that arena, so microfinance. Maybe we'll love to hear a bit, from Aziz, and of course we'll listen to Sonny afterwards. I'll have to introduce you, Sonny, but maybe we'll listen a bit to Aziz with the extension of credit facilities on the continent, etc. Being the treasurer, from Tanzania, from this Tanzania bank. So, what are your views with respect to the growth, of that particular sector, microfinance in Africa? We learn, we hear about my mobile money. We hear about, so many countries, just buying into this, microfinance. So what's your views, what's your take about that, please?
No, thanks. I think first, let me say, I think banks have realized, 10 years ago, if you remember, when mobile network operators, started doing lending, I think banks saw them as competitors. And there was a lot of, efforts trying to, stop, what they're trying to do. But I think ever since it's been realized they need to collaborate. And as such, we've seen significant collaborations between banks and mobile network operators, in this case, telecoms. And a lot of, integrations happening, push from the revolutions of the likes of M-Pesa, where now, financial services players, especially banks, have access to different, data points with respect to having a complete view of their client. So credit scoring, helped by evolution of AI, in really trying to determine, whether these consumers or these micro or small enterprises are actually lendable. And as a result, actually, we're also seeing, significantly, banks moving into uncollateralized lending. So purely, microloans, no security required, but backed by data and proven data that these clients are actually able to transact and repay. And we're seeing increasingly access to credit growing at, good rates. But also, thanks to the higher, internet penetration in Africa, I think more than half of African population now have access to internet, but also, significant growth in access to, mobile phones. That is also really helping. In Tanzania, for example, about 74% of the population have access to mobile phone. If you look at countries like, Mauritius, also increasingly, a lot of access to mobile phones, and that is really helping. So I think in terms of shaping the direction of credit, there's still strong demand for credit in Africa, but certainly fintech has really come to revolution that change. And I'm glad to see that banks have actually embraced them and working in partnerships to actually drive that growth. So I think I'll stop there for now.
Yeah,
Chairman.
thank you very much, Aziz. So maybe just introducing Sonny. So Sonny, you began your career it's quite long, a long CV that you've sent to us. So I'll just be very short. So you're the Group CEO MD of DLM Capital Group. So you have quite a rich career. So you've been advisor to the minister in Nigeria in some instances, and you were even 2018, which I read actually. So you were tasked by the Council of Petroleum and Energy Ministers of Africa, under the chairmanship of quite a renowned doctor, Dr. Kechik-Wu, to set up the Africa Energy Investment Corporation. So there's much to say about your CV, but maybe we'll listen to you with regards to this. Microfinance industry, which has been on the rise. So, in addition to what Aziz, has been saying, we want to have your views, on the progress of this particular segment in Africa.
In terms of microfinance.
Microfinance.
All right. Good morning to everyone. Again, my apologies for being late. Microfinance, as you know, has evolved heavily on the African continent. Obviously, as you know, Africans are very used to buying and selling small businesses, etc., and that's helped to fuel microfinance banks across the continent. Having said that, there's also been a shift in microfinance banking, because what's kind of happened is microfinance bank licenses have now become the bedrock for fintech consumer lenders. And that has had quite a phenomenal growth across the continent, predominantly because it's very unusual. If you go back 10 years, the concept of an unsecured loan did not exist. And what's happened over time, you just mentioned things like AI lending, even normal corporate lending. You have things like deduction at source type of lending. And that's actually fueled, at least beginning to fuel, not what I would say a credit-led economy, but at least it's began to put some level of financial inclusion for people, has begun to, at least if I look at like the part of my institution that does this business, for instance, it's the kind of loans that are being done are so varied and really adding what I would say good value add to the continent. And I think that if I look at Nigeria specifically, your domestic mobile, we call them like deposit money banks, who were before averse to lending, have actually began to create things like payday loans, which hitherto never existed, have now started, short-term, 3 month, 4 months, 6 months loans, right? So there's a lot of, that competition is beginning to start. In other words, the idea of credit is beginning to permeate into the banking system, which previously did not exist. So yes, I think there's and as the industry evolves, as data gets better, as artificial intelligence becomes more involved in the lending machinery, my view is that you would have lending becoming much more of a driver for banking in Africa. Thank you.
Thank you, Sonny. So we've talked about banking, the history a bit of banking in Africa, the challenges. We've just talked a bit about microfinance. So I just want to touch a bit about investing into projects in Africa. We had a panel, I think it was the previous panel, before the minister, I think, talked, very informative on investors, investment, the mood, etc. So maybe we'll listen a bit to Antonello. In fact, Konstantinos was supposed to be here, but I think he would not make it, unfortunately. But fortunately, we have you, Antonello. So please, I'm just thinking a bit aloud, about governance practices, the regulatory framework, political stability, etc. So what are your views with regards to investors when they have to invest in African projects?
Yeah. Thanks, Shamin, and again, good morning, everyone. Indeed, Konstantinos couldn't come, so I'm taking his place. But I work very closely with Konstantinos. I'm basically responsible for the banking team at Moody's. So at Moody's, we do meet a lot of fixed income investors. So we have a good flavor of what they are looking at and what they look for when they invest into Africa and in any other emerging market. And I mean, it goes very much beyond the numbers, right? I mean, it doesn't stop with looking at the metrics and looking at the balance sheet and profitability of a bank or institutions. I mean, there must be a qualitative part of the assessment that is key and essential. And so a lot of the discussion goes around governance. I mean, we heard before, I mean, governance is key. It's about risk management of those institutions, right? Do they have the procedures in place to assess really the risk of the counterparties, that they would lend to? And also, I mean, the management, clearly. I mean, is the management able to change their view and their strategy quickly? I mean, we are in a very fluid macroeconomic environment, so if the management of an institution that you are investing in is not able to change, strategically and tactically, that would be compromising their balance sheet and profitability. So indeed, I mean, and then of course there is another layer of discussion that is about, the government, the institutions, the macroeconomic situation of the country, right? So a lot of the discussion we have with investors, actually we have our banking team and sovereign team together, because of course goes hand in hand with, what government is doing, the steps they are making, as well as the regulator and what the regulator are tackling issues, etc., etc. And last but not least, I mean, clearly, more and more, and I know that we talk about impact investing before, but ESG is becoming dominant in our discussion. I mean, again, not just in Africa, but everywhere, together with cyber, right? And then we haven't mentioned much about cyber, but is that institution, I mean, clearly financial institutions do have a very sensitive information, and whether institutions have the ability to defend themselves by cyber attacks has become also a dominant discussion point.
Thank you, Antonello. Before passing on to Vanita, just a comment. I had a question to the panel, just before. It was very, it just came to my mind. I was thinking about what about ESG, sustainability, etc. And the response was quite, very, very, very astute, to the point that if you invest in Africa, of course, you look for returns, etc. But if it has an impact, it should have an impact. So maybe we'll listen a bit to you, Vanita, please. What's your take on that with regards to what do investors look at? You've been in Africa, you've been in Kenya, so you've traveled a lot. So please.
Yes, I think I will add to the governance part because this is really, really important. And from what I've seen as well on mainland Africa, and obviously from how we do it, and I'm also talking about from a corporate service provider perspective of how we see it as well in Mauritius, in country, and then on mainland Africa. So basically, I think business facilitation is an important component when it comes to attracting, investment to a particular country. And obviously, then this gets into the economy and the whole machinery starts. So business facilitation is key because what we see, for instance, in Africa is that there is room for improvement in terms of, registering a business, simplifying those procedures in terms of registering a simple business. Also, we would, if we look at the judicial system, and those are day-to-day burden, of businessmen, of investors. So if you have to look at the judicial system, for instance, in terms of contract enactment or even dispute resolution, so there needs to be really some governance element that get into strengthening the judicial system in general across the African countries. So yeah, I think this is also very important.
So thank you, Vanita. So let us now take the aspect of risk. When we talk of Africa, we talk of investments, investors, we talk of investment flows, but there is also the risk element that is very important because, the very intimate connection between risk and return. So, Sonny, to what extent do you think, the risk mitigation strategies have been successful in Africa with regards to, multinationals, players, in the global industry, investing in Africa? Please.
I think the biggest risk that I've seen for most investors is currency. Look, the returns in Africa are generally pretty high in terms of double-digit returns. Obviously, the high inflation rate and so on and so forth. But when you now look at that vis-a-vis the depreciation of the currency, and the fact that those currencies are difficult to hedge, you're not going to get a currency swap. And if you do, the swap spread basically wipes out the returns. So, you find a lot of investors would probably do things like more equity, 2 times booked and so on and so forth. And even with that, you could still get caught up in currency issues. Also, sometimes you have the lack of availability of foreign currency. So you have investors, and I've had some of my investors have that problem whereby to get their monies out becomes a problem because of a shortage of FX, right? But on balance, to my mind, I mean that really is the most, if that could be resolved, I think there'll be a lot more inflows onto the continent. If you take the Nigerian currency, for instance, that's just tanked in the last, exactly.
Can I just stop you? I'm just thinking something just prompted my mind. Do you think that, in an ideal world, Africa as a whole, would it not be, ideal to have one currency for the whole, But understand, there are so many countries, so many minds,
Bro, that's not possible.
But in an ideal world...
Let's just cap that. That's not going to happen.
Yeah. In an ideal world, that should work.
In an ideal world, but, Africa is not one economic bloc. It's not a Europe. I think, look, if you ask me, I think what should happen is that Africans should seek to actually sell what they do sell, right? So that commodity demands their own currency. Now let me explain what I mean by that. When a central bank governor is telling everybody, go and get dollars, exports, well, if the dollars are not demanding your currency, then there's no demand for your currency. And simple economics basically says, if you don't have a demand for an asset, would it have a value? It can't have value. So let me take again, I keep referring to Nigeria because, that's where we do a lot of our business. Nigeria sells, I don't know how many barrels of oil a day, right? For X number of dollars. Vitol, which is one of the buyers, would pay dollars to NNPC and that's it. But what if Vitol had to go to Zenith to sell dollars, to buy Naira, to pay NNPC? Then that creates demand, and that's how you sustain value. Yeah. So those are the sort of things I think policy change that need to happen, but unfortunately, because of all the arbitrage that exists, things like that don't happen. But those are the kind of things that can be put in place to help these currencies get stronger and obviously make sure that their buy power is much better. In other words, the purchasing power parity is a lot better than where it is today.
Yeah, Sonny, very quickly, just a follow-up question on what, because when I was thinking about this currency, in an ideal world, you said that, in an ideal world, and what do you think about securities exchanges? Because, I was working at the stock exchange at one point in time, I've been there for many years, and, we were discussing about, consolidation of exchanges in Africa, etc. So what do you think about securities exchanges, the role played by securities exchanges in Africa, especially to the mobilization of capital, etc.? So very briefly, because we have a few more questions before we just turn to the audience.
Let me say, I think, look, the exchanges have done reasonably well, given the circumstances. You have certain countries in Africa that haven't even developed their own capital markets. And then you have certain countries that actually have reasonably developed capital markets and even some that are actually quite sophisticated. I think that what AfriExim Bank has done with the Africa Free Trade Agreement, which is then given birth to the Pan-African Payment Settlement System, PAPS, I think that could help in terms of consolidating, because what that does, for instance, is I'll give an example from an investment banking standpoint. So a company can raise monies in, say, Kenyan shillings, right? That's a Nigerian company can raise money in Kenyan shillings, right? And the proceeds, so in other words, the investors have given Kenyan shillings, and then the Nigerian company will receive Naira, right? And then when the Nigerian company is paying its coupon, it would pay the coupon in Naira, and the Kenyan investor will receive Kenyan shillings. Now that helps in terms of integrating the capital markets. In other words, moving, let me say the individual capital markets to more of a bigger cross-border capital markets. And I think that's an opportunity going forward.
Thank you. Thank you very much, Sonny. Antonello, so we are living in a world where digital, we speak digital, we talk digital, we see digital, and where everything seems to work at the tip of one's fingers. So from where you are, from where you've worked, so to what extent do you believe, fintech, blockchain technologies, digital payments, etc., assisting businesses to carry out the business ventures throughout Africa, in Africa? Please.
Yeah. No, I mean, we touched upon this, before. I guess clearly technology has been a key facilitator for financial inclusion in the continent. There is no question around this. But there is still a lot to do. I mean, there is still a lot of unbanked population. I mean, like when you look at developed markets, right, over 90% of the adult population have a bank account, right? In Africa, it's still 50%. So it's still a way to go. But the good, positive story is that if you look at the number 10, 15 years ago, you were a penetration of 20%, right? So indeed, I mean, mobile operators, I mean, as mentioned before, Aziz, I mean, has clearly contributed a lot in terms of financial inclusions. But there is still a lot to do. I mean, and it's not just mobile operators. I mean, again, Aziz mentioned also, artificial intelligence is becoming key for customers that don't have no credit history, for example. Data mining, artificial intelligence allow to provide loans to people that have no credit history. And it's also around proof of identity, right? When you think about it, I mean, there are 100 million people that have no ID in the continent, right? So they have no way of identify themselves. And so when you think of technology as a way of, through facial recognitions, iris scan and things like that, and fingerprints, would allow, technology is really an enabler of more financial inclusion. So indeed, I mean, that's an area of growth in the continent, and clearly, I think technology is going to be the key pivotal, continue to be, because it's already been, but facilitator about increasing banking penetration. Yeah.
Thank you very much, Antonello. So you've talked about financial inclusion. So maybe I'll turn to Aziz. We've listened to Antonello with regards to financial inclusion. Maybe we'll love to hear from the men and then maybe from the women afterwards about the reduction in the gender gap, on the continent, and also empowerment of women, etc. So what's your take on that? What's the progress on that particular front?
No, thanks. I think there's some good progress being made. Intentional initiatives by, organizations, public sector, private sector. In my own country, I'm led by a female president, and she's doing an incredibly good job. A female CEO, she's doing an incredibly good job. We have programs to actually diversify more, not just from the employee's perspective, but also on the customer side. We're increasingly seeing interesting products, propelling especially our female colleagues to really move up. And interestingly, if you look at some of the data available, we talk about non-performing loans. They're actually lower in the female proposition compared to male proposition. I would think that a lot more still needs to happen, but I'm glad to see progress that so far, we see in the continent, across, sectors, public and private. So maybe I'll just stop there.
Thank you very much, Aziz. So Vanita, maybe from your side, from the women's side. Yeah. So what's your intimate conviction?
Yeah, I think obviously women, financial inclusion of women is very key as well. Because basically low level of financial inclusion, as we've just discussed, historically has been related to low income levels. But also there has been this significant barrier of traveling over long distances to have access to financial services. And very sadly to say, among the many people who are financially excluded are also women. And just to maybe give, what needs to be done? I think there's a low-hanging fruit because we've been talking about microfinance institution. Let's take, for example, those women entrepreneurs or women-led SMEs. So there are existing grants, there are loans that are out there for them, but we just need to modernize those loans. I believe this could be a low-hanging fruit. Because, surveys have shown that, not only women entrepreneurs are less likely to take loans, but the borrowing terms are very unfavorable to them. So, and then when it comes to, obviously, the interest rates are much higher for women entrepreneurs, even the collateralization, of the higher portion of the loan, they have to face this. And even the shorter term loans, they have access to only shorter term loans. So having said all of this, I think...
I'll just stop you. So there is discrimination with regards to interest rates for women.
Absolutely, absolutely. And
It's the first time
you're hearing
I don't
this.
know about the audience, but it's the first time.
Yeah, and maybe to add to this also, Shamin, because I'm sure many people could connect to that. Unfortunately, I don't know how many women we have here in the room, but you know, some of the barriers for financial inclusion of women, if we give it a bigger context, is actually non-financial barriers. And one of the things is about control and access to property rights, you know. I've been traveling a lot in those countries, and when some women told me about that there are in some countries customary laws where if you need to have access to land titles, you can't do that without your husband's authorization. So I think those are things that women are facing, women entrepreneurs are facing today. And I think we need to do something also about that, especially from a policy-making perspective. Yeah, but maybe just to add also, Shamin, I think this is...
Very, very briefly.
Yeah, please go ahead. Yeah, okay. From a banking perspective, because we're on a banking panel, I think we should also recognize certain commercial banks that have actually very interesting programs for women-led SMEs, because they have also reported financially rewarding you know, initiatives for the bank themselves. Like, for instance, in terms of better brand loyalty, you know, women tend to be more brand loyal. And as soon as they gain the trust in the service provider, they would definitely buy more other, you know, other financial products from them. And also, I think very importantly, the last point, because I think this will interest also the bankers, is the health portfolio. So there has been many in-country studies also showing that the loan portfolio of women women entrepreneurs actually have the lowest shares of the non-performing loans. And this is the reason for this is very simple. You know, the woman, once she's got the money, she wants to do the payback early, and she wants to restructure her business earlier.
At least they recognize this in Africa. Huh?
Yes, yes.
Very good.
Yeah.
So maybe we'll turn to Antonello, the last question, and maybe, you know, you are from Moody's, so would like to listen a bit, you know, to you with regards to these, I'm just referring to the previous panel where they spoke about, you know, free rating agencies. So what are the roles, you know, very briefly, what is the role being played by those rating agencies? We now have GCR, for instance, which is in South Africa and playing a role quite actively in Africa. So what's your take on that, Antonello? Please.
Well, first of all, clarify that I'm on the analytical side, so not the commercial side. And but I mean, look, at the end of the day, I heard the panel before, and everyone has their own views. I mean, we do our work, right? We assess risks and opportunities in the market. And so we like to think ourselves as a facilitator in the sense that we want to make things more transparent and in a consistency manner, right? And that's why a lot of our role is not just providing rating, but writing research and making sure that people understand the risk and rewards they are making when they invest in financial institutions in Africa, right? So at the end of the day, it's the investor, they have to make their minds and their decisions, and we try to provide more transparency, and we spend a lot of time with investors, right, talking about our methodologies and to make sure that there is a consistency across our views. So that's what we do.
Okay. Thank you very much. So now we left like 3 minutes. So please, one question from you, please. The mic. So we have 2 questions. Maybe we'll have only 2 questions, please.
Yes. So I go back to the main question there. I'm not sure the panel respond to the question how to achieve strong investment. And I have a comment on that. I hear always talking about currency, capital markets. So the focus is always on the macroeconomy, not on the microeconomy. Because these countries, as you know, their fundamentals is 80–90% is informal economy. So I would like, and when I hear also Moody's or BNP talking about financial inclusive financial.
Please,
I feel very
very
uncomfortable.
What's
So
your
can we
question?
go back to the main question?
Yeah.
How to achieve strong investment returns?
No, it's not on the. No, what's your main question? So you were talking about currency in Africa, the impact of currency.
Yeah.
And you were talking about capital markets.
So that's not what's the panel talks about. Sure. I think we should instead looking at microeconomy, we should look at the microeconomy policy to enabling the environment.
Sorry, maybe for the panel. So we've talked about microfinance, the development microfinance in Africa, so mobile money, etc. Blockchain platforms. I don't know if that corresponds to what you were expecting. Quite extensively, we've talked about microfinance. Or maybe we can take it afterwards, because time is running quite swiftly. There was one question from here, from this gentleman, please. Short question.
Yeah, thank you very much. Quickly, it's kind of linked to what he just said now. Many of the enterprises, MSMEs that exist, they are in the category of micro and small. There are only a few medium and large scale enterprises. So what would you say maybe 1, 2, or 3 most important indicators or factors that those MSMEs should have in terms of whether their performance financially and all of that, basically, in order to access this financing that you're talking about, basically? 1, 2, or 3 key indicators or factors that they should have. The micro and the small, medium, the small enterprises also that should have.
Anybody would like?
Because majority of them are that actually shop owners and things like that in the economy.
Sonny, please.
When you let me try and understand you. Yeah. You're talking about small companies here, micro, small and medium-sized.
As we say sometimes in Nigeria.
Now, are you looking at that from investing in those kind of companies from outside?
Those companies basically accessing financing from the
domestics,
from the
domestic financial institutions. Yeah,
exactly.
Exactly. Because the only way you can ever have exposure to that kind of credit is if it's actually aggregated, either say via some sort of securitization mechanism or whatever. But to look at those from an individual micro perspective would be absolutely impossible. 1, 2, absolutely very difficult, and from an administrative standpoint, quite difficult. I mean, I don't know what your views are, but yeah.
I mean, of course, as a rating agency, we tend to look at the big companies, etc. But I think what you were mentioning before, unsecured lending becoming more of a feature of some of this market, right? Because indeed, I mean, some of the banks have been, and of course, every country is different in Africa, but clearly, when you look at the banking, the lending has been historically more on the big, corporate side. But now with the new technology, and we talk about artificial intelligence and data mining, etc., unsecured lending is becoming the new the new world, right? And whether some of these unicorns some of these fintech are able to tackle the issue that you say, of the black economy that is clearly significant and important. And I think that's the next step, right? How you manage to make those unbankable, customers bankable with data that and this is the mantra, right? Yeah.
Maybe very briefly, Aziz, you wanted to say one thing.
Yeah, basically to formalize. You just tell them to formalize the businesses. I think that is very critical. Because once they're in the ecosystem, as they've just said, nowadays there's so many crates, not necessarily having collateral, but it's important that we get to understand, the business flow. So I think that's really what I wanted to add.
Vanita, last word from you.
I would just like to add, especially being from a corporate services provider perspective, sometimes, we often hear about bankers saying, we don't have enough bankable projects. So, and one of the things that, some of the banks have started, the commercial banks have started doing is to actually establish SMEs training academies where, you start explaining to, as you said, the shopkeeper or, an entrepreneur how to actually work out his business plan. And then, then the banks help him, with the rest of his journey. I think this is also very important.
Just before finishing, I would just as a concluding, concluding remarks, I'll just ask you one question. There are 3 answers to that. You have to choose one. So high, average, and low. So what is your take with regards to the outlook with respect to returns, strong investment returns in the financial services sector in Africa? So I'll start maybe with Sonny, and then we'll progress like this. So is it high? What's your take? High, average, or low? Very rapidly.
That's a tough one because each country is very different.
You have to say one word.
Yeah. Well, look, then it would be a weighted average. So
average.
I would say medium. Yeah.
Antonello.
All right.
It's a tough one, right? I mean, it's risk rewards. I mean, it's
average.
Yeah, I mean, it's probably average, but again,
average.
I'm very positive. I would say highly average.
Okay, highly average. Okay.
I think it's a high.
Okay, it's a high. So thank you very much for your patience, and maybe a round of applause for our panelists, please.
Thank you very much to our panelists, to our esteemed moderator. I think it's a